Assalamualaikum warahmatullahi ta'ala wabarakatuh, and hello to all of you. This is the lecture for chapter 9, retirement schemes for individuals. And in this chapter, we're going to look at several elements of retirement schemes, which includes EPF, pension, especially for government servant, as well as annuities. As for the introduction, for someone who actually work in the company, okay, who is becoming the employee of a company, then it is compulsory for the employer to set an EPF account for that particular employee. Okay, but if, for example, you are having your own business, then the situation is different, where you have an alternative whether you want to invest or you want to contribute to the EPF, or you can also choose other types of retirement scheme. In respect to the types of retirement scheme, we can divide it into two main components, is either formal or informal. The informal is actually referring to the scheme where the business pay retirement benefits to the employees, including the employer. He is also an employee, based on the discretion, based on their judgment, whatever amount that they want to contribute. The formal scheme is I think that this is something very, very familiar, where it has a system like the EPF fund is one of the formal scheme, where the recipient or the employee would actually be able to identify what will be the amount of the retirement fund, for example. And they can also make some kind of projection on what will be the percentage of the growth. They can expect that they will receive some return for every year, for example, and this is also a part of the scheme that related to the tax scheme. And this is something that are much more organized and much more that's suitable for those who have a plan to retire. The retirement scheme can be divided into two. We can categorize them into approved and non-approved schemes. In regards to the approved schemes, these are basically the retirement fund that are set up for retirement purposes, which meets the technical stipulations of the Inland Revenue Board that are subject to certain act under Malaysian income tax. And the example of approved schemes is obviously the EPF, okay, where this is the most popular and the largest approved retirement fund in Malaysia, where there is a specific ratio that need to be contributed by the employer as well as the employee. Okay, so the act in regards to the EPF, they provide a definition who are actually the employer. So definition of employer, which includes the manager, the planner, or person responsible for the payment of the salary or wages of an employee. Anybody or persons, whether or not statutory or incorporated, federal and state government statutory boards. So they are actually employer in this act, and they are responsible to pay or to contribute to the employees' contribution in the EPF. The acts in the formation of the EPF also provide detailed explanation who are actually the employee. So the employee is basically any person who is employed under a contract or service or a parentage, and for those who are expatriate, okay, expatriate employee, for example, let's say there is a company in Malaysia, and there is someone who work in that particular company, but he is actually not a Malaysian citizen. He is possibly someone who is from Australia, for example. So he is an expatriate, and expatriate is not compulsory for him to contribute to EPF. Okay. Other than that, like domestic servant, okay, also not liable to contribute to EPF. Example of domestic servant, if you have a at home, you have a helper at home, okay, a servant at home, a waiter, butler, someone who is taking care of your baby, for example, doing nursing to your baby, for example, the gardener. This is a part of the washerman, for example. These are part of the job, driver or cleaner at home, where you are not you're not compulsory to pay or to contribute for the EPF. Partners in the business also not liable to contribute to EPF if someone is self-employed, for example, pensioners, for example, if he is a government servant, so he receives pension for the retirement, so he is not qualified, or no, it's not qualified, he is not compulsory to contribute to the EPF. He is self-employed. Right? Let's say if someone is running his own business, then he is also not compulsory to contribute to the EPF. So, of course, if you look at the textbook, there are lots more of specific detail about who is basically the employee that must be contribute to EPF, and who are the individuals who is not compulsory to contribute to EPF. But for the sake of brevity, I will just explain several items that I think it is important to be highlighted to the students at this point of time. Alright, so here is basically some information on the conditions of the EPF withdrawal. In EPF, there are two accounts, that is account 1 as well as account 2. Account 1, it will keep 70% of the fund, and account 2 is actually holding 30% of the fund. So once an individual reach at the age of 50 years old, they can withdraw this all of the balance in account 2. Okay, the remaining in the account 1, the individual can only withdraw the money once they reach 55 years old, or in case they are being physically or mentally incapable from engaging in any further employment. For example, like he hit by the accident, for example, and not able to work anymore, then he is qualified to withdraw the money. Or if he is the expatriate, for example, expatriate and contribute to the EPF, although he still not reached 55 years old, he can withdraw the money if he wants to leave Malaysia permanently, if he plans to go back to his country permanently and not intended to come again and work in Malaysia. Okay. Other than that, you can actually withdraw the EPF in the case of death. Okay, if let's say this is the individual who has an account with the EPF, and before he reached 55 years old, he passed away, so the nominee, okay, in Malay we call it penama, will be able to withdraw the money. And if you look at the information in regards to the withdrawal of the EPF, the condition, it varies from time to time, and it might be changing from time to time based on the economic situation and condition. In regards to the saving in the account 2, which is actually represent 30% of their saving, okay, there's an advantage for those who contribute to EPF, where they can use the saving in account 2 to pay to claim for the initial payment of the house. Okay, and this is basically the general information on the eligibility for an individual to withdraw the money in the account 2. You can withdraw your saving based on the following, whichever is lower. So as for individual, I give an example. As an individual, let's say the price of the house is 300,000, and the loan that you get from the bank is 250,000, which means this particular individual have to pay 50,000, okay, for the initial payment of the house. So you can claim that 50,000 plus with the 10% price of the house, okay, which equivalent to 300,000. All right, so this is in the case of individual. In the case of joint, let's say you buy the house, husband and wife, for example. So for all applicants, husband and wife, they can claim for, let's say the price of the house is 300,000, the loan is 250,000, then the 50,000, okay, the gap between the price of the house and the loan plus the 10% of the price of the house also can be withdrawn from the EPF account too. Okay, if for example there's someone who don't make any payment at all, let's say in this case he make an initial payment of 50,000, but let's say he is the one who receive 100% loan from the bank. This guy actually can withdraw 10% of the price of the house. Okay, 10% of the price of the house. So let's say if the price is 300,000, then of course he is entitled to withdraw 30,000. Okay, from the account too. And the withdrawal of the amount in the account too is based on, you know, the specific condition, whichever is lower. Okay, whichever is lower, which means, okay, let's say the balance in account 2 is 75,000. Okay, let's say the balance in account 2 is 75,000, but he is eligible to withdraw 80,000. Okay, let's say by taking this case, let's say he paid 50,000 and he is entitled another 30,000, that is from the 10% price of the house. Let's say that is the condition, so he is entitled to withdraw 80,000, but the balance is only 75,000. So between these two figures, whichever is lower means that he is only able to withdraw 75,000. This is lower than this. Okay, this is the amount that the balance in account 2 has. Okay, so this is the amount that he can actually withdraw. All right. In regards to the frequency of withdrawal for us to buy a house, how frequent we can do this, how frequent we can actually withdraw the money in the account 2 for us to buy a house. This is only allowed for the first house only, okay, basically. But if you have made a withdrawal previously to buy your first house and subsequently you sold the house, then you may withdraw to buy a second house, but there is another condition for that. But that's basically what people mainly practice, that is to buy the first house. People also can withdraw the money from the EPF for the purpose of treatment of illness, and there are specific critical diseases that has been outlined by the EPF. This includes, you know, like cancer, heart disease, okay, organ problem, stroke, etc., etc. Okay, so the money that has been withdrawn for the purpose of critical illness can be used to cover for the cost of the medical. And if, for example, that particular individual they receive a benefit from the employer, so let's say the employer paid for all of the expenses in regards to the medical purposes, then he is not be able to withdraw the money from the EPF. Okay, another alternative treatment, for example, like Chinese acupuncture, for example, it is not covered under EPF. So there are certain critical diseases that can be considered for an individual to withdraw the money from the EPF account. It is important to note that the withdrawal of the money from the account 2 will be used for this treatment of the illness. Okay, so which means that if someone suffered from certain disease, then they can make a claim or withdraw the money from account 2. Okay, so it is not for account 1, because account 1 is solely for the purpose of retirement. Beside of that the money in account 2 can be used for the medical purpose of that particular individual, there is also a specific condition where someone can actually withdraw if the spouse is having a health problem, or children or stepchildren. So parent-in-law means that the money also can be used to cover for the expenses for that purpose as well. Besides, the account 2 also can be used to reduce housing loan, okay, for the purpose of reducing the housing loan. That is also from the account 2. Other than that, the account 2 also can be withdrawn for the purpose of education, as well as for the purpose of investment. But this investment is actually from the account 1, okay? Alright, now I'm going to explain the withdrawal for the purpose of investment from the EPF account. It is from the account 1 actually, and the minimum amount is 1,000, and the maximum cannot be more than 30% of the amount exceeding the required basic saving under account 1. So for the purpose of investment, we have to follow the rules or the required basic saving in account 1 for us to check whether we are entitled or not to make an investment using our fund in the account 1 for the purpose of the investment for the retirement. Okay. So as for this information, this is the most recent one that I retrieved from the KWSP website, because the required basic saving in account 1 for the purpose of the investment is actually it varies from certain time to time, because in the past it was like for 18 years the basic saving in the account 1, the minimum or the required basic saving is 1,000, but now it has changed. If you are 18 years old, then the basic saving that you must have in the account 1 is 2,000. All right. If you have an extra, I mean that if your saving is more than 2,000, that extra amount need to be evaluated if you want to use it for the purpose of the investment. Okay, so 18 years old, basic saving is 2,000, 19 is 4,000, 20 years old, the required basic saving is 6,000. And if you check on the schedule that has been set by the EPF, you can see that the aim of this required saving is they want to make you prepared at the age of 55, you will have 240,000 in your EPF. Okay, so this is one of the requirement to prevent contributors from making excessive withdrawal for investment, because the EPF, they don't want you to withdraw too much money for the purpose of investment. Okay, so that is the aim that they want at the end of the day, where once you reach 55 years old, you must have, you know, this amount in your EPF account. Okay, so in order for us to compute the eligibility of whether you can take out some portion of your investment, of your saving in the EPF for the purpose of investment, we have to follow the schedule that has been given, okay, in the EPF website. Let's say you are a member, you're a member A, your name is A. Okay, and the age of this individual is 22, and the saving in the account 1 is 4,000, but the required saving is actually 10,000. Okay, if you look at the table, if you are 22 years, then yes, the basic saving that you must have is 10,000. But if you only have the saving in account 1 that is 4,000, which means you are not entitled to invest in the investment. You're not be able to withdraw the money for the purpose of investment. Okay. For client number B, age is 22. You have a saving that is 11,000. Basic requirement is 10,000. Therefore, if we take, you know, like 30% out of that 1,000, the gap is 1,000 here. All right. So the 30% is about 300. It is not is also not qualified because the required minimum investment is 1,000. So once we calculate, he only entitled to invest 300. So 300 is not enough, because the minimum limit that has been set is 1,000. For the client C, let's say he is 25 years old, saving account 1 is 24,000. Basic saving that is needed if you reach 25. Okay, if you reach 25, then yes, 18,000. So basic saving is 18,000. 24,000 minus with 18,000, 30% out of the remaining differences between saving and basic requirement is 1,800, which means it's more than 1,000. Therefore, he is qualified to invest the amount of minimum 1,000 and the maximum is 1,800. Okay, so means that out of the saving, he can actually use 1,800 for the purpose of investment. Okay, if you look at the contribution rates of the EPF schemes, it also varies from year to year. I mean, not by yearly, but after certain situation, based on the economic condition, the percentage of the contribution will also change. And the most recent one, as for 1st April 2020, we can see that there is a reduction of the employee contribution, that is from 11% now become 7%. Okay, this is all due to COVID-19. You can see very huge policy, very huge differences has been made, where the contribution by employee has been reduced a lot. That is from 11% just to 7%. This is something that I also never seen in my life. Okay. The EPF annual dividends, the EPF holder will receive a dividend by yearly, and we can see that the statistic about the rate of dividend also change from time to time, and we can see it's like a declining trend. Okay, and it's fluctuating, and if I'm not mistaken, in 2017 is also around, I think that around 6 something. Maybe we can have a look. I forgot what is the figure, but we can see that in the past they give like 8%, which is quite high compared to what we are receiving nowadays. Okay. Alright, as we already know, EPF can be divided into two accounts, 1 and 2. Account 1 comprises of 70% of the fund, while account 2 comprises of 30% of the fund and can be used for housing purpose, education, health concern, etc. etc. Okay. In regards to the withdrawal upon the age of 55, EPF members are allowed to withdraw the full amount of the saving in the fund when they reach at the age of 55. They can also make a partial withdrawal, okay, especially for those who actually reach 55 and made withdrawal, but at the same time still contributing to EPF, because in certain case, like although someone already reached 55, they are still working, they are still active, so they are still contributing the money to the EPF. Therefore, once they reach 55, they withdraw the EPF, but still working at the same time. Therefore, they are still contributing to EPF. Thus, okay, the contribution that they made after 55 years old, not allowed to withdraw if they are in the EPF account for less than a year, which means that money must be kept in the EPF account for at least a year. Okay. Beside that, if you are very concerned, if let's say and someone not be able to control their spending habit, so they afraid if they overspend, therefore they can also make a monthly withdrawal option, which means that you withdraw the money bit by bit. So this is also a part of the patterns on how you can actually withdraw the money from the EPF account.